What's good everyone, welcome back to another video. In this video, I'll be sharing a market analysis for the day or for the following days on the DXY, the Pound USD, EURUSD and Gold. So stay tuned. So let me just jump in right to the DXY chart. This is on the daily chart. We can see that price has been bullish ever since it bottomed around the 100 region, and it has been forming high highs, high lows, as you can see very clearly. We are currently seeing the DXY range a little bit. It formed a new high last week at 107.3 areas, but then started to push back down. But we still did not break any daily structure, even though price briefly broke through this daily low set over here. There was no daily candle close, daily candle body close below this level over here. Therefore, structure to me is still bullish, and until a daily close below this 105.6 or 105.7 areas, I am still intraday bullish, or I'm still bullish on the dollar. Okay, so anyway, price pushed up after the CPI release news on last Thursday. Okay, you can see a push up. Even on Friday, it continued to move up, but it's clearly at resistance right now. It is facing resistance at the prior high around the 106.7 regions, and you can see yesterday we put back, we had a push down on Monday. So what's this box currently is the daily FVG. Let me just remove it. This to this point is the daily FVG, the fair value gap. Okay, and this yellow line is the midpoint of my fair value gap. Currently, price is trading into the FVG gap. Okay, it's trying to attempt to form a support over here. So my trade bias is, if it manages to maintain support over here, I think the DXY can continue pushing up. Of course, the resistance is still at 106.75. If we can break, then most likely you attempt to break this high over here. But if we get a daily candle close below this FVG, which is around 106, okay, if we get a daily candle body close below 106, then I think higher chance that the DXY will continue to range in this big range over here. It will attempt to go even lower, back down to these support regions over here at 105.6, 105.5. Okay, but till then, I'm still bullish on DXY. I'm anticipating a support being formed here and a reaction over here in the coming days. But of course, if it fails to hold, then if we break this low, then the next area I'm looking at for DXY will be to trade down to the daily FVG over here. I've drawn at around 105.2s, 105.3s. Okay, so other than that, I'm still intraday bullish on DXY. Ultimately, if you zoom out on the weekly, of course, I'm looking at price of DXY to trade even higher to take out this buy side liquidity over here at 107.99, basically 108, and higher up. This is a huge inefficiency zone. If you zoom into the daily again, moving to the left side, you can see another daily FVG formed to here. Okay, once it broke below this key level at 109.5s, it had a huge sell-off, leaving a huge inefficiency area over here, which I think price will trade into. And because the DXY is treated as a safe haven currency as well, I am still bullish, because with the ongoing war or the ongoing tension with Israel, people will flock to safety, and they will flock to gold as a safe haven or the US dollar as a safe haven currency. That is why we can see price still remaining pretty bullish. Alright. But one thing to note is, because last week the Fed speakers has been pretty dovish. They're talking about maintaining rates now. They have reached a terminal rate, Fed funds rate, and they're not looking to increase. They're not looking to hike the rates any further. That is why DXY could remain, relatively weak due to that. But other than that, I'm still intraday bullish. Okay, moving on from DXY, let's just cover pound dollar first. Let's just start off with gold. Coming out to the daily. Alright, so gold is pretty interesting because it is supposed to be inversely correlated with the DXY, but you can see during Thursday after CPI, DXY pushed up, but gold pushed up as well. This was due to the tension rising in Israel. As I mentioned, gold is a safe haven, so people flock naturally when fear arises. Anyway, you can see on the daily chart, it corrected this entire move down just in a few days, which is insane. Alright, but I'm still saying that the gold chart has not broken structure yet. This was the previous daily lower high, and until that is broken, the daily chart is considered still bearish. But I got to remain intraday bullish because the tensions have not been resolved yet in Israel, and I don't think it'll be resolved anytime soon. So I'm just looking for long setups instead of short setups, which is the higher probability of longs compared to shorts. So very simple analysis. This was August lows. You can see some reaction. Price, once it breaks below August lows, it had a huge sell-off. Price came back up. Okay, tried to be in resistance over here at the August lows, but you can see the huge tension between Israel and the Israel conflict. It just pushed up all the way up. Okay, so right now I'm looking at this area to be a support area. Okay, August lows, as I expected. Since this could be a huge deviation, okay, and price usually tends to, after deviation, come back to find support over here at this level. Okay, so that's where I'm looking for a reaction. That is like the 1890s, 1885s. I don't know if it'll go that low, but that's an area to watch for. Also, this was the daily FVG. Okay, set over here, created a push back down. Even when it came back up, it held as resistance briefly, but because of the Israel tension that I mentioned. So now we can treat this as an inverse fair value gap. We can treat it as a support zone now. So if it comes down to these regions around the 1900s, you can treat it as support, and then I'll look to long over here. If I will look to short as a swing, I will only look for continuation move to the downside if price on the daily chart closes below 1855s, because this was also a previous daily FVG area, which is very important. But you can see it only briefly went below it before a few days later it pushed back up. Okay, so that's for gold. Of course, the buy side liquidity I'm looking for price to take out is, of course, remember I mentioned this daily lower high, subsequently this buy side liquidity, and ultimately this area 1987s. Okay, so that will be your target points. Okay, then I'll move on to pound USD. Again, the daily chart. Last week I mentioned that when price was around here, okay, that I was anticipating pound USD to pull back as DXY pulled back as well. I expected price to have some reaction at the previous support now turn resistance, and that's what exactly happened after CPI pushed down. Okay, but the thing to note is the weekly candle did not close below last week's candle wick. So this means that pound USD may not have enough liquidity to push price down, and we could anticipate a pullback again, or simply just a range formed in the next few days or weeks. Okay, it held this support zone pretty well as well. This was the prior support form. Okay, price briefly pushed below, came back up, now pushed back to the same area again, held as support. So price is pushing up again. So as I mentioned, as I'm still bullish on DXY, I'm still bearish on the pound USD, and therefore I'm looking mainly for short setups. But of course, if I want to look for a long setup, it will be very, very short term. Okay, so very simply, this is my first area of interest. This is the pound USD daily FVG. Okay, it's formed between last Wednesday and the Friday of last week. Alright, I'm looking for price to kind of trade up to this area, hold this as resistance, and zooming into the lower time frame, maybe the 1 hour, the 15-minute, or the M1 chart. If there's a break of structure, I will look to take a shot from this region over here, back down to at least this support zone 2120. And if it manages to hold and break below, then the next target will be the prior lows and then 1.2010. Alright, but till then, let's see what happens. If there is a daily close above this gray box area, which is above the FVG, then I guess I have to look for further continuation up to this buy side liquidity over here from before the CPI, which is 1.2335. But till then, I'm still bearish. Alright, if it does this, it takes out liquidity but does not hold above, comes back down, I'll look to take a huge short over here from these regions. Okay, but till that happens, this will be my first area of interest. If I would look to long in the intraday, zooming to the 4 hour or the 1 hour. Okay, let me zoom in even further. This is the M15 chart. Okay, because the M15 chart is still bullish. Okay, it's higher highs, higher lows, higher highs, higher lows. There is one M15 FEG over here, and if price trades into it, maybe into London, okay, I might take this long up to this daily FEG that I mentioned. Zooming out, there we go. This is the daily FEG I'm talking about, which was that gray box above here. Okay, so that could be a decent trade. Minimally, it will be about 40 pips. That's a pretty good intraday trade to me. Okay, so let's see if this happens. On the EURUSD, of course, very similar to pound USD. Still bearish on the higher time frame. You can see price on this bullish trend line, it has broken down. Briefly took out sell side liquidity, therefore I was expecting price to retrace. Okay, and that's what happened. It retraced back to the May lows and also retested this broken bullish trend line. It's pretty nice structure so far forming on EURUSD, but of course it's less volatile than pound USD. But again, same thing, you can see there is a daily FVG zone over here, which we already have tapped yesterday on Monday. So currently it is trying to form a resistance over here, and if price, let me zoom in, you can see on the 4 hour chart, price has taken this 4 hour this H4 buy side liquidity as well. And if you can remain below this level, let's say London, push down and then push up again, maybe takes out liquidity again, but then holds below, that could be a potential short. But it will be pretty messy because it kind of already took the H4 liquidity, so it might not want to seek this liquidity now, and it has also filled some of this FVG already, holding below this midpoint as well. So I wouldn't really look to long the EURUSD unless we get a daily close above this gray box, okay, above 1.05816. Then on the H4, I will look to take this as support now. If price trades above, holds this as support, then I'm looking to trade all the way back above to 1.063 regions. Okay, then I would look to take high risk, high rewards shorts from this region over here. Okay, I will look to take a short from this area all the way down. Or if price pushes up a little further up, okay, you can see these relative equal highs over here. I still think if price pushes up to these regions, I think price would look to take out this liquidity over here, and then I would look to take a huge short over here, which is a high probability in my opinion. Okay, so hope this video finds you well. Of course, higher time frame, I'm still bearish on all these XAUUSD pairs, but intraday is kind of forming a huge range right now. So mainly not looking to swing right now, but just take intraday trades until we get a further clearer picture, especially the DXY. The DXY will tell us everything. Once it breaks above this 106.8 regions, then higher chance that most XAUUSD pairs will continue pushing down. But if DXY continues to range in this big range over here, then the other USD pairs will range similarly, and then we just have to stick to intraday trading. Okay, hope this video finds you well, and remember, the markets are always here, but your capital may not. Peace.